Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Robert Swarthout, founder and CEO, portfolio manager of Teton Crypto Capital.
Good morning.
Hey, Robert.
How you doing?
Good. So this is our first crypto edition of the podcast for 2024.
Yep.
And man, what a maybe want to recap 23.
Yeah, it's 23 was a grind up. I think a lot of people missed the news on crypto if they weren't paying attention.
What were the leading returns?
Bitcoin for sure.
Nobody was paying attention.
Yeah, but well,
because in December 31st of 22,
right? Because the world crypto had died at that point.
Yes.
Yeah. It needed some resuscitation.
Crypto winter had become crypto ice age.
Yeah. So it kind of markets generally outside of crypto were up last year, but crypto kind of just had a relatively consistent grind up last year. Obviously there was some volatility, but at the end of the year, I think Bitcoin was up around 100%, maybe high 80s, low 90s, something like that. And it was a strong year. It's a
where is that in relation to 22, or this kind of got back to where it was?
22 was certainly a down year. I forget the exact number.
Yeah, 12/31/21. I think the rate of return over the 2-year period is it's not 100%.
You're right. It's probably 50% something.
Maybe.
Actually,
look at that.
I know at the end of last year, Bitcoin was 16,000.
Okay.
16, 18, something like that. So,
oh wow. And then we're now sitting at
43-ish.
Yeah.
So maybe a little over 100% there. I remember the exact numbers, but it's a, outside of Bitcoin, but still in crypto, the total market cap was up. I pay attention to the one excluding Bitcoin and Ethereum because my fund doesn't hold those two. And it's kind of like those are so heavily weighted.
Yeah.
But the total market cap excluding those two is up around, I think around 30%. So, it was a good year.
Are you starting to see people kind of jump on the bandwagon?
Certainly more interest.
It always seems to happen near the tops.
But it's not a top right now. Like I'm not nervous about it for them. And I talked to them. I'm like, I probably will have to have that conversation with different people later on, say this year or something when the market is likely going to be higher. But it's, if your view is a 2 to 3 year horizon, I mean, yeah, you're going to have potentially a drawdown in there. But it doesn't seem to be a bad thing.
It's the same with equities. We had 26% rate of return out of the S&P, actually a little higher than that. And then 22, there's an 18% down year.
Right.
And all the return came out of the last quarter.
Right.
For the year. I mean, July, we were thinking, oh, this is not looking so good. Right?
Yeah. Right.
So it's just more volatile than that. And then you look at the NASDAQ, and NASDAQ was up tremendously over 23. And, for me, when you're, I'm a core asset holder, so I'm going to hold S&P and small caps and maybe add some tech or growthy side to the portfolio for the long term. But, you take the good and the bad, and I take responsibility for neither. Meaning that, clients will say, oh man, you did a great job this year. It's a 26% rate of return. And then you're just like, yeah, but I don't wave a magic wand.
Right.
There's no day trading here. It's just, I want you to focus long-term and more importantly, I want to focus on complete fiscal health of your family, not just
right.
not just your portfolio.
Right.
I mean, I learned that in 08. It's just, you don't have 100% of your money in investments. You got to have cash reserves. You got to focus on planning.
Right. Absolutely.
So when it comes to crypto, I feel like it's just the stock market on steroids. Cause if you look, there's correlation there.
Yeah,
it's not uncorrelated.
It's basically the NASDAQ, but
crypto's never been up when the market's been down over an annual cycle.
Right. Exactly. Yeah. This is, whether we've recently gone through a recession or we're about to go through one, I think it's up for debate depending on who you talk to, but crypto's never gone through recession either. Outside of potentially the one we've gone, because it started in 9-10. So it never had to go through a cycle.
I mean, we've had technical recession, during that COVID year, there was a 3-day recession.
Right. Yes. but a
true sustained recession.
Yeah.
Yes. Which I mean, this is a whole different podcast. But I wonder, even if that's even possible anymore. There's so much funding government and politics involved in monetary policy.
It's all warped.
Now, that it's not like the 19 whatevers.
Yeah.
All right. So I think elephant in the room is Bitcoin ETF.
Yeah, we are. It feels like we are so close.
I know we had talked about in our last podcast together with Don Friedman.
Yeah, it's. I'd imagine we'll be doing another one of those soon here, because the stars seem to be aligning the 5th through the 10th, and we're recording this on the 5th. So this could become stale very quickly.
True. By the time you listen to this, there could be Bitcoin ETFs.
Yeah.
I just feel like that when that happens, there's going to be a big increase in Bitcoin value.
Not financial advice.
Not financial advice. You don't run out and buy Bitcoin, but I just think that there's a lot of pent up demand for an easy access.
Right. I mean, there's so much money that functionally can't get to any crypto right now.
Right.
Bitcoin obviously being the biggest name, biggest market cap, all that kind of stuff. It's a, I see. So one of the applicants, Bitwise, is one of the applicants of the ETF. I think there's 10 of them right now being considered. They have produced 2 commercials. They haven't put them on TV, but
but they're ready to go.
They're ready to go. One I find really fascinating. I guess really entertaining more so than fascinating is it's the most interesting. The Dos Equis most interesting man in the world.
Is that the one you text me?
Yes.
Yeah. That's right.
And I was just like, you know what? That's a great marketing one. Like,
is it the same guy or is it?
Either. If not, it is a really good lookalike.
Right.
But he kind of just has that whole shtick. He's sitting on a table with some people and he's just talking real slow.
Right.
But I was like, I would love to see if there's I haven't bothered to look, but if there's a Vegas line on how many Bitcoin commercials there'll be in the Super Bowl this year, or how many Bitcoin ETF commercials will be in the Super Bowl.
Yeah.
My over-under's 3 on that, probably, if I had to guess. Because, it just all seems to be aligning.
So basically, we got commercials ready to go. We have some companies have already, maybe all of them have already have APs in place that are that are holding Bitcoin.
Or would hold Bitcoin.
Right.
There's no confirmed that they're actually already holding it, as far as I've seen. So the AP part has been the last week or so.
Would you be able to see that?
If you knew their wallet address, but they likely aren't publishing the wallet addresses they're holding Bitcoin in.
Can you not see the volume of Bitcoin?
Yeah, but they're likely buying it through Coinbase, so it's already going to be mixed.
Oh, okay.
With all their other volume.
And Coinbase has their reserve, I would assume.
Reserve in what sense?
Well, you got to have, my understanding with an AP, you got to be able to meet the supply and demand of both sides of the transaction, right?
So
you're not going out and buying instantaneously.
Yeah.
At least that's how they do it in stocks. They will hold their own securities.
So maybe the APs have been, slowly accumulating some Bitcoin. They're likely not to say publicly that they're doing that, or what volume that they're doing that. I can't imagine Coinbase is doing anything besides just being a middleman for the buy and the sell side. But yes, the last week has been the S1s of these applicants being updated to include the APs, Jane Street, JP Morgan. I forget who the third.
JP Morgan is the funny one to me.
So I put this in my newsletter to my investors. So Jamie Dimon, let me pull this up real quick. Jamie Dimon has been always negative against crypto. I couldn't find a single positive comment he's had. And then over the course of from 2014 until literally this year, last December, so a week ago for that matter, I don't know if that's 8 times, he's been said publicly, probably at a conference or something, or maybe CNBC, something, Bitcoin will not survive. It's not going anywhere. It's a fraud. I'm a major skeptic. If I was the government, I would shut it down, which is not possible. You may be able to shut the on and off ramps, but you're not shutting down Bitcoin.
Right.
So he get all these negative things. And then on the 29th, BlackRock and Valkyrie update their S1s to include the authorized participants, and JP Morgan is one of the, so he just slid into the last moment. He's like, I'll make money right here.
Yes.
So moral of the story is watch what they do, not what they say.
Right.
So it's, when I saw that online, I'm like, oh, this is too good. I got to share this. So,
yeah.
But
not just him. To be fair to him, there's been a lot of other people.
Warren Buffett, Charlie Munger.
Well, Warren Buffett still doesn't own Bitcoin. I promise you that.
Well, not directly, but he owns companies that work in the crypto space. So it is like he has a very mixed. If you look at the true record on it versus what he says, and I would assume that he knows he owns some of that. But
I'm about to say it probably wasn't his
decision.
Yeah, it was probably one of his managers
or companies within his portfolio.
That's true.
That's true. Yeah, to his defense, it's probably a little bit more of a difficult situation there. But so it feels close. There's rumors that potentially it gets announced today, the 5th, in preparation for like a Monday or Tuesday launch. It's up to, as we talked about in the last podcast, it's up to the the sponsor to decide when they're going to launch it. They all have tickers. They all, at this point, I believe, have talked about their fees. I want to say it's the BlackRock iShares one is giving free trading of the ETF for 6 months. So,
it's going to be on everybody's free platform,
I would think.
Yeah.
It's certainly an arms race / an absolute sprint to figure out who can get market share.
Schwab and Fidelity ought to be able to offer that pretty quickly. I would think that brokers may restrict it.
Yeah,
it could be a thing.
Yeah, I've heard some.
I don't mean like Schwab and TD. When I say broker, so in my world, there's institutional sides of these big firms. So our firm is at Schwab Institutional, not Schwab Retail. So Schwab Retail and Schwab Institutional, we would have full access to that.
Mm-hmm.
But there are brokers like Securities America, and these are guys attached, or these are firms attached to advisors like myself. They're really just selling things. They're not really doing advising. They're just making transactions.
Right.
And they have a really tight compliance department that I could see that could potentially block something like that. But you never know.
Yeah, I've seen
because there's going to be an ETF.
Mm-hmm.
There's going to be a Bitcoin ETF. We know this. So the question is, which day of this month is it going to be?
It seems to be.
But there is no crypto regulation in place.
Nothing
there
has
is
changed
no
on that front.
Single governance of crypto by any department of the government. Multiple people.
Correct. Yeah. There's no regulation, no rules.
SEC. I mean, they've done some things, right?
There's only court rulings and no judgments against Bitcoin.
Correct.
Yeah.
So the only thing that's different when the ETF launches is that you can wrap this sucker up into an ETF and you can trade it.
Well, because I said to someone the other day, the only reason why there's a Bitcoin ETF is because there's no group to argue that it shouldn't be a security.
Right.
So it's getting wrapped up in the ETF as a security.
Yes.
And all the Bitcoiners that wanted the government to go away and not have money, all of a sudden are happy with Wall Street money. It's just highly ironic.
Right. Well, they ran a lot of people off to get to that point. But Bitcoin is at an ETF. You're less likely to have it stolen.
Well, you can't have it stolen.
What?
I mean, how it would be stolen at the point? I mean, I guess
it would be a heist. It would be stolen. It'd be a heist.
It would be a major hack event. Like yes. Yeah.
So it's much more secure for an individual person to buy through the ETF than trying to create their own wallet, and then they lose the key to the wallet. And if you're trying to buy $10,000 worth, right?
Yeah.
So there's a lot of validity that comes with the ETF, but it's still an industry. It's not regulated.
Right. Yes.
So an SBF, which has been cleaned up, sort of, I guess.
Yeah. Well, did you see they dropped his charges recently?
Oh, that's only because they got him convicted for the rest of his life on the first set.
Well, he hasn't been sentenced, but yes, he was convicted. But all the campaign finance charges, they dropped.
Of course they did.
I was like, how many politicians made the phone call to the DOJ and be like, this needs to go away
Every
now.
Democrat in California.
Well, and Republican. Like he gave money to like 80% of Congress.
Yeah, that's crazy.
Like he had bought the government.
Well, I guess that's why he got those dropped, but he couldn't get him out of the first set, which is going to put him behind bars for a long time.
So spared him sometime, I guess.
That's great. Well, even the latest thing in the Journal was talking about who's the guy over at the other competing firm for
CZ at Binance.
Yes. So evidently his girlfriend is like the number 2 person there.
Oh, I did not see this.
It was in yesterday's paper. And
oh my gosh.
They're like, well, yeah, they got rid of him, but she's still there. She's a mother of 3 of his children. They're not married. But she's like the number 2 there.
Wow.
So is he really just doing all his stuff through her now?
Oh
and
my
she was left untouched in all this.
Well,
which is crazy.
They did up his fine. I saw that originally it was reported at 50 million. It went to 150 million. So maybe that was the negotiation. I'll give you some more money. Like he's a billionaire, so it kind of doesn't matter. But like, I'll have to look that up. I hadn't seen that.
That was, I guess for listeners, he was basically, I don't know if we ever talked about it on the podcast, but
money laundering is one of the things.
Sending money to Iran and other inappropriate places.
They had AML, but only for select customers. And KYC, other customers, they didn't care. So child sex trafficking, Hezbollah, Iran, a lot of bad.
Basically, U.S. The accusation was that U.S. money would end up in these countries, and then it would end up in their system as they were moving it throughout the rest of the world.
Right. So it's that was, in hindsight, that was a
which ironically he's the one that called out SBF.
Yeah, well, a kettle knows each other, right? Like
the criminal.
Yeah,
the criminal got the other is like, no, go look at that guy.
Right. Yeah, but in hindsight, I think that the Binance thing had to be taken care of, cleaned up for an ETF to happen. So because they had so much control over the Bitcoin price.
Right. Oh, absolutely.
So, yeah,
absolutely. All this stuff was created by rogue people, maybe a few with good intentions, but many without good intentions.
Yeah. But yeah, so it's the ETF is coming soon. I described it to somebody recently, and I posted on LinkedIn about how I view this whole event, if you look at it, I guess zoomed out a little bit, is a bit of how a tsunami works, right? You have that initial burst, and then the tide recedes, and then you have the big wave. I think the tide receiving will be shortly after, within weeks of the ETF launching. There will be some volume, but then the critics will come out and say, look, there's not as much interest in this. And then the big wave comes over time when people actually, because I can't imagine there's that many people waiting in their Schwab or whatever account waiting to buy an ETF tomorrow if it launched today. There's some.
Probably not on the institutional side, but
because most
on the retail side.
Because most people aren't actively trading or shouldn't be actively trading their retirement account.
Yeah, I would never put it in a retirement account, but certainly a brokerage account.
Yeah, brokerage, but most people are busy with their job, right? I mean, like you have to keep perspective.
But if your net worth is over 10 million, you're constantly looking for alternative assets to invest in. And traditionally for us, that's always been real estate, not like through a fund necessarily, but a second home, a third home, land,
right?
Commercial buildings, whatever. I think that this is making a case that you could say, okay, I'll take 1% and I'm going to drop money into a fund like yours, or maybe just straight up into the ETF and see what happens. And if I lose 200 grand, it's less than 0.1% of my my net worth, But I don't know. I'm not talking to any advisors right now that tell me, oh yeah, the Bitcoin ETFs coming out now. They all own Bitcoin personally, but the risk of taking a client down something that is volatile who doesn't understand it is a problem. You have the same issue. People come to you wanting to do that, but you also have a lot of questions.
I have a question,
and you have to set expectations on how volatile this asset class is.
And in my fund, they have to be a accredited investors. So there's, in some sense, some protection there for me as long as I make them sign the right papers, right?
Right.
But for the average Joe in the street coming to talk to an advisor, obviously, I think in some ways the risk is higher there.
No, very true. Very true. But honestly, I'd rather see someone buy a Bitcoin ETF who has no idea exactly what's happening there than buy one of these leveraged inversed ETFs.
Oh, yes. Oh, for sure.
Right.
Because they don't understand the product.
No, they don't understand the product. They're going to understand. It said if the market went up, I would gain, or if the market went down, I would go up 2x. I'm like, doesn't work that way. It works that way in the day by day. That's how that works. Yeah, that's frustrating. And then there's a whole new other ETF that I didn't even know existed. That basically is like an annuity. It guarantees you, you'll never lose, but you can
cap on the gain.
You can gain. And then when you read the fine print, it like caps your gain at like 5%. So last year it really sucked.
Go buy treasuries.
Yeah, right. Go buy a 5% CD at this point and just skip the anguish of all that. But I can't remember the name of those ETFs escape me. someone just commented on our podcast one time. So when are you going to talk about these? And I responded back, was like, actually never.
Right. Yeah. Thanks for the reminder.
This should never be in someone's portfolio.
Right.
Anything that's produced by like Allianz, I'm just like, yeah, no.
That's funny.
So let's talk about Bitcoin halving, or I would say splitting.
Yeah. So in the crypto world, it's called the halving. Roughly every 4 years, Bitcoin goes through this halving event where the number of Bitcoins mined on a per block basis, so roughly every 10 minutes, gets cut in half. It's been part of the math ever since the beginning, and it will be part of the math all the way until the last Bitcoin is mined in the year 2140. So well past when we're here.
So it means you double the number of coin?
No, cutting them in half. So I forget what the exact number is now. So say it's currently 900 Bitcoin every 10 minutes. It would be 450.
Oh, so that would promote price appreciation.
Price appreciation. Yeah.
Yeah. Okay.
Because the miners get it, and they're functionally having to work twice as hard to get the same amount of Bitcoin.
Yeah.
And so they want to be paid more for that.
Who sets these rules, and who?
That's literally part of the code when Bitcoin was created.
Oh, wow.
It's just part of the formula. That's, you know, if you believe the story, Satoshi Nakamoto, whoever he, she, they are, is the one that created it. And that's part of, you know, the code. You know, it's written in stone effectively. So every 4 years in the market, as the Bitcoin price appreciates typically into that kind of event, and this year it's going to be April. Last time, 2020, it was roughly in May. Well, not roughly, it was in May. So, you know, it appreciates, the market kind of follows along. And, you know, just generally in crypto, outside of even a halving event, Bitcoin increases in price. The altcoins and Ethereum kind of lag behind a little bit as money flows out of Bitcoin. People see it, it kind of flows into other coins. People try to, in a sense, double dip on a market rally. And, you know, some are successful, others are not. But it's just kind of generally how the market flows.
Interesting. So, all right.
Yep.
Where do you think we're going to be at the end of 2024 in crypto? Give me your 2024 prediction. We'll replay this in a few months.
Yeah. Yeah. I think it is super high level. We're higher, right? You have this ETF event early in the year, obviously in January, likely happening. You have the halving in April. And just generally, we're on this cycle of not just a halving year, but also it's a, if crypto continues to follow the cycle it has in the past, this should be a bull market year, kind of ending in late 24, early 25. And so, you know, I don't necessarily can't tell you what I think Bitcoin will be at the end of the year. You know, I think that we will see an all-time high this year for Bitcoin. So I think the last time it was 68,000 and change, something like that, 65, 68. I think, you know, does it get to over 100,000? That's where the Bitcoiners with the laser eyes and all the other craziness, think we're going higher. You know, I've seen 250,000. Some are crazy numbers. Kathy Wood at 1 million. I think hers is more long term. It's not necessarily this year.
Right.
But it's,
if it went 1 million this year, you'd have just people. I mean, they would be sold out of Lamborghinis and Ferraris.
Yes. Yes. Absolutely.
Every beach property would be
yes, Miami would be taken over. Would be a Bitcoin sign. But yes, I think that, you know, if 22 was certainly a down year, 23 was a grind up. We may have started technically a bull market in Q4 of 23. We'll see as it plays out here in early 24. I believe that we have, because we're probably due for a bit of a small correction. I think that comes after the ETF thing. Like, I think that's the tide going away moment. There was a chance 2 days ago that I thought we were getting that. There was a 10 or 15% correction in like 10 minutes. A lot of liquidations. There was the greed scale from, you know, fear to greed was approaching pegline greed. A lot of anticipation of this ETF.
Yeah.
And then boom, there was an article posted in one of the crypto rags about how the SEC plans not to approve the ETF, and the market corrected. I'm like, this is just such rudimentary. And like, the cynic in me was like, oh, that means that one of these authorized participants needed a discount in Bitcoin. So they got an article published because there's not against regulation.
Yeah, that would not be against regulations, which to my point earlier,
yes,
price can still be manipulated by people with enough money.
Right.
Right.
And I can't imagine it's expensive to buy off one of these crypto racks.
Right.
Especially since they run outside the US. So,
right.
Again, I think 2024 is generally going to be a good year. Most people will be happy if they've made crypto investments in 24.
I pulled this out of your newsletter. Who's the FASB and why are they confirming a fair value approach? What does all this mean?
Yeah, so FASB, I believe, is the Financial Accounting Stability Board?
Standards Board.
Standards Board, yep, okay. They basically help create rules that accounting or the way the books should be kept for companies, like public companies. I mean, I think it applies to private companies as well, to some extent. Up until, or even till today, if you wanted to hold crypto, and it's generally just been Bitcoin for companies holding it, like a Tesla or a MicroStrategy, holding it, publicly traded companies holding Bitcoin on their balance sheet, the standards only allow them or require them to mark down the Bitcoin price as it depreciates.
Okay.
But never allowed them to mark it up as it went up. It seems a little odd.
Yeah.
Mark to market on the way down, and then it's stuck. So starting in January 1st of 2025, if I'm not mistaken, I think we have to wait a whole year for this to kind of come through.
You're allowed to market where it is.
You're allowed, at that point, you'll be able to do mark to market, true mark to market, up and down. Okay. This seems like housekeeping type item here.
But it seems common sense, but
yes.
What that tells me is at least one government board is seeing it as a legitimate asset.
Yeah. And do you know if FASB is actually government run, or is that like a true third, almost like oversight body?
I thought that was kind of like FINRA, where it's like run by the government, but run by the industry.
I can't say I did enough homework on that to know.
That's how I've always seen it.
Yeah.
I don't know. I don't know.
In some ways it would make sense. It would be on almost like IRS related. So anyways, but yeah, I think that's just, cleaning up of some of the rough edges around crypto to make it a little more friendly for companies. MicroStrategy I mentioned is, it's interesting. They're a technology company that Michael Saylor, the founder, and I don't think he's a majority owner anymore, but like he CEO of, it's almost like a Bitcoin holding company. Like they've accumulated so much Bitcoin. I think he holds like 5% of the total supply or thereabout. So a lot. Like they've bought $3 billion worth of Bitcoin that is worth $4 billion. So like they're up on their investment at this point, but and my understanding is they've had to mark it on the down, but they couldn't mark it up. The market knows how much he holds because he publishes each time they buy. But like, it's just kind of fascinating to kind of see, if you since there hasn't been an ETF, if you wanted exposure to Bitcoin, you could have been buying MicroStrategy.
Right. That's true. But weren't some people doing that though?
There's some people were for sure.
I remember that in the paper.
Like, I have no idea how that's performed for people because obviously there's other influence. There's another business there it's attached to. But, it's.
Well, no, they were saying that you would buy that because you were getting the deep discount. The valuation was so low.
Oh, because they couldn't mark it up.
There's an arbitrage.
Yeah.
And then if they ever separated it out.
Yeah. In some sense, it's like the Grayscale Trust, Bitcoin Trust, where there was a deep discount. Now that is, I think, within 6% now.
I remember staring at that deep discount going, it's just a little outside my risk tolerance, but I'm like,
But, Grayscale potentially is getting a conversion into ETF. That one is fascinating because they already had an existing business with it. It fees around 2%.
Right.
So their fees are going to get squashed with this ETF launching.
Probably what they're hoping is they get volume.
Volume. Yeah.
So it's like the S&P 500 ETF used to be like, 20 bips. And then now it's like 3.
Right.
But they still make more money.
Yeah.
Right.
So it's volume.
Yeah. Let's talk about tokenization of real-world assets. You linked to an article that you sent me for our show notes, which I read through, which is very fascinating. I had to read it twice though, because I'm like, okay, this is like a whole different language.
Yeah. In the reason why I included this in this particular podcast is we're talking about 2024 projections of sorts. With the upcoming bull run, like in crypto, each bull run seems to have a theme or maybe 2 themes around it. The last theme was NFTs. everyone was buying
I
stuff.
actually totally forgot about NFTs.
Yeah, and the vast majority of those are worth zero.
I remember someone buying a $500,000 fake house.
I think the famous one that at least I remember seeing recently talked about was Justin Bieber bought like $1.5 million NFT of some kind, and it literally the other ones that were very similar to that are being traded for $1,300 now. So, anyways, but so this next
tulips,
tulips
of
that was tulips for sure. But the technology will morph itself into something real in the future, in my opinion. But in that iteration, it was tulips. This upcoming bull run, I believe the narrative around it is going to be around tokenization of real world assets.
Explain.
Yeah. So we've talked a lot in previous episodes about like, what is an NFT? What could it be down the road, right? Like I've talked about, it could be a car title, a house deed, all those things. I think that I probably refined that all stuff will happen eventually. Whether they actually call it an NFT or not, I think will be decided later. But I think what you first see from a tokenized standpoint of real world assets, you start to see, Franklin Templeton's already doing it. They have a bond fund that's tokenized. You start to seeing stuff that Wall Street touches every day getting tokenized, because I think that they start to find cost efficiencies in running stuff on a blockchain. Obviously, regulations and a lot of accounting stuff needs to be figured out. But there's a good chance that accounting thing got figured out because Wall Street wants to do something.
Right.
So tokenization can mean a lot of different things. It can mean it could be a house, like we've talked about with an NFT. It could be bonds, and it can be things that are, I recently made an investment in a token. I'm not going to give the name, but it's a platform that helps company tokenize their rewards programs. So,
okay.
Coke points, Pepsi points,
right,
that kind of thing, but tokenized in a blockchain. So then if somebody accumulates points, what if they want to cash out and they don't really want all the stuff?
Yeah.
So that's happening outside the US, because I think that's if I'm not mistaken, Australia, because they have regulations.
Right.
But it allows, it's starting to create economies around things that really didn't have markets before. Like you were in these dead end silos. Like your Pepsi points were not good for anything but a hat that had a Pepsi logo on it,
right,
or whatever. I mean, whatever they decided they wanted to be good for.
Right.
Well, what if somebody wants more Pepsi points? Shouldn't they just be able to buy them from you?
Who would ever want more Pepsi points?
I don't know. I mean, but yeah, it's a silly example.
Yeah.
But or airline
apply
miles.
that. Apply that to airline miles. Maybe.
Yeah. I mean, there's marketplace. Heck, I've sold Sky Miles before.
Yeah.
But it's, or Sky Pesos, to be very clear about that. But it just, in a lot of ways, I think this technology is, and I've said this in the past, is so young, we don't really understand the use cases for it yet. Like we're fumbling through silly things to figure out this actually might be, this is like Web 1.0. We haven't got to Web 2.0, the social media age in that sense.
Yeah. I just go back to it's all Fortnite money in the end. That's how it could be used. So it already exists. These games.
I mean, Fortnite's a great example. I mean, I've never played the game, but you may collect things. I don't know if you get a shield or whatever's in that game.
You spend. I don't have to do this. Kate and we have one child that is playing this game regularly, and every time you're at Kroger or somewhere, Publix, oh, can I get a Fortnite gift card? No, because you have to take dollars and you convert it into the Fortnite bucks.
It's a one-way thing.
Exactly.
Well, in a tokenized
if you ever want
world,
to extract that, you could never extract that.
Right. So, but there may be,
So they're buying skins. They're buying how you look in the game and all that, right?
Right.
So then once you buy it, it's just money spent. It goes to the game
developer. Yeah.
But then if you can start trading it amongst yourself,
right, create a market. And I think that kind of stuff happens. I know there's some crypto companies that are trying to get their blockchains enabled in that kind of environment. Again, I think at least in the US, it's regulation now. Are those securities? Is a skin security? The SEC would say yes.
The SEC would say yes.
But
so now now they're big going after 8-year-olds playing playing Fortnite.
I mean, all of a sudden there's a lawsuit shows up the door, and the parents are like, "What's going on?" Like, "Oh, your kid bought a skin, and sold it, and promised that it would make the other
as an adult,
right?" It's just insanity. So,
true.
But yeah, real world assets. I think bonds, and other things that Wall Street, cares about. I think is where we're going to see the push come from. And I think that's potentially where we get the regulations from, is because Wall Street wants them in. Obviously, they got the reach.
Give some of the examples of how it's being used inside that article. I mean, there were several cases where you're like, I don't think people really understand that. Like you already referenced, one was the bond funds, right? So basically, you're taking a bond fund, you're able to, I guess, it's the trading efficiency of it.
Right. Well,
because basically you're just wrapping it up and you're just passing this wrapper around, as opposed to having to liquidate the basket and
that, and just generally, like, blockchains are going to be more efficient than all the other, I guess, old technology that the current financial system runs on. Like, it can be run 24/7, 365. And the challenge with tokenization of real world assets, though, in my opinion, is going to be like all this stuff around KYC, right? Knowing your customer and like who's buying what.
Right.
There's not great identity solutions on the blockchain right now. So like, I still think that like there's a chance that you're buying a tokenized thing through a brokerage account, but you have no idea it's tokenized. I think that it's going to start as an efficiency mechanism for the back office. Yeah. And then maybe over time it morphs into realize, oh, this is the tokenized version. Or I can't imagine they run two of them side by side, but like it's again, it's this, they're trying to find the least amount of ways, or the least difficulty of getting to the other side without having to, in many ways, educate the public on what's going on.
Yeah.
Because the public shouldn't care that it's tokenized.
Right.
They just care what the price is. And can they make money on it?
True.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
So another example of, a use of tokenization that is just beyond plumbing, or excuse me, that is just plumbing, is, JP Morgan, or Goldman Sachs was doing something that saved 15 basis points for them on doing. So it's, again, cost savings or time savings. There's another example of a distributed ledger using security solutions that saved 100 hours of people time in a week because they could tokenize stuff. I think that it's kind of like the AI revolution is going to take everybody's job. Like, will crypto do it? No, I think that there's plenty of work to do.
Yeah.
And humans tend to be more ambitious than they are lazy. So they, all this savings will get consumed in other ways.
I guess it's like you talk to these people and they're like, based on what the government has spent during COVID and now, and they say, tax rates are going to be at 50, 70% on the high end. Mm-hmm. And I'm like, was that not the case 30 years ago? If you looked at what we were spending going forward, that people are discounting technology and our ability to work more efficiently. And so I was trying to explain to someone earlier, it's like, well, I need to convert all my money to a Roth IRA right now because I'm in this huge tax bracket when I retire. Mm-hmm. So I do all the math and I'm like, actually, you're going to be in the 24% bracket, which, good for you. If you're in retirement, 24% bracket.
Yeah.
In the 37 now, but he goes, yeah, but it'll be 37. 24 will be 37 in the future. And I said, you're not taking into account what AI can do for efficiency, what blockchain can do for efficiency. Mm-hmm. And if companies are making more money with less people, right? Mm-hmm. Then there's more taxes to be paid. Right.
I mean,
and even if people are making more money because there's less people needed to do the job, there'll be jobs for everybody. But the point is that the revenue will be higher in the future because we'll be more efficient workers. And therefore you won't have to have a 70% tax rate. Now there's always going to be politicians are going to spend that excess. Oh, there's an extra $1. Maybe we should start borrowing less.
Right.
That's a real problem. You should probably vote those people out.
Right.
But I think people are just discounting that in the future. Again, it's like I go back to Tang and Velcro. We got Tang and Velcro because of the space program. Now the government spent billions of dollars on those shuttles,
right?
But things don't slip now,
right? Yeah,
that's and funny. People can drink something other than water.
Yeah, that's too good.
But yeah, you just it's not. I just feel like when you talk about AI and blockchain, or even just crypto in general, people just get cross-eyed. Like, I don't understand it. It's all voodoo. Make an effort to understand this stuff.
Yes.
It's something that is going to be important going forward.
Yeah. I think that if it's something that you just spend 15 minutes a week,
or go take Don's class.
Right.
It's like $400. Just go take Don's class. You'll be a certified crypto person.
And if you just want to feel like you're staying up on the news at some level,
right.
The Wall Street Journal's got a weekly newsletter that comes out in email.
That's right.
You could read the headlines, and if one of the things catches your attention, read it, and you hopefully learn something that week.
Yeah, so, that's right. Yeah. I subscribe to that as well. We also have a couple episodes you guys might be interested in. Episode 197 talks about will financial advisors be using a Bitcoin ETF soon. That was our last crypto one. Episode 172, our crypto special tips to secure your passwords and crypto assets. That was another good one. I think that applies to almost anything these days. I just got my Venmo account shut down because someone was trying to pay their bills with my Venmo account. Just kept getting emails that said, you've reset your password. You've reset your password. You've reset your password. I'm like, holy crap. I'm not resetting my password. And then eventually got an email that said, we have locked you out of your account. And now, I don't know. I still can't use Venmo, but they can't either.
You're like, good. I didn't want to use it anyways.
That's right. Now I'm like, do you take PayPal?
Right. Yeah.
But yes, that's very important. This is episode 202, Robert. Thanks for doing this. I can't believe we've been
doing this
a while now.
Yeah.
And our crypto episodes are always highly listened to. Thanks for listening. Today's episode, if you're interested in learning more about Wiser Wealth Management or Teton Crypto, you can reach out on our respective websites. Google us. We're sitting out there waiting to talk to you.
Sounds good.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.